Good afternoon, guys. Let me just make sure my mic is actually on the right one. Yep, should be all good. How are we all doing? Hello, Carrie. Hope you're well. Hi, Denise. Good morning to you. Hi, Adrian. Good morning, Estelin. Hope everybody is well. We've had some interesting developments, haven't we? Some good ones, to be fair. Some ones that we've kind of talked about in the past. Some ones that we kind of expected. So yeah, it's been quite some decent moves the past couple of days. We've been looking for that dollar index so to break the 102, head towards the 101s. We've now traded through the 101, and it looks like we're on our way to the sort of 99 handle. I can get rid of these now. These are not important. So dollar weakness in the market. We also had some data today. So the CPI yesterday, let's just talk about the CPI yesterday. It's actually a little bit of a shock to me. Especially core CPI shocked me more than anything. Good afternoon, Kumbalani. Thank you for joining me from South Africa. Really appreciate that. Hello, Vincent. Good afternoon. I'm good, thank you. Hope you're well too. All right, as usual, guys, we're just going to go over some markets. Just going to go over the bit of the movement that's happened, and yeah, if you have any kind of markets that you're in, that you're looking at, that you want me to take a look at as well, throw them in the chat. We can go over a few of those. Hello to Sharon. Hope you're well. All the regulars in today. It's good to see you all. Cries long 94.37. Nice. Forgot about the DAX. No problem. You can take a look at the DAX. Yeah, Denise, it was a bit of a strange one, wasn't it? The CPI numbers. I mean, I do expect them to come down at some point. Obviously, the data's lagging, isn't it? So I did expect them to start coming down at some point. I just didn't expect it so soon, especially the core CPI. Core CPI was a little bit of a shock to me. Obviously, core CPI is without the sort of volatile food and energy sectors involved. So yeah, I was a little bit shocked by the core CPI. I'm not going to lie. I actually thought core CPI would still remain fairly sticky because we've seen that talk from the Fed. Not that the market particularly believes the Fed at the moment, but you know, yeah. So core CPI shocked me. Did I expect the dollar to move lower? Yes, we did talk about the 101. Did I expect it to move as aggressively? Absolutely not. But here we are. We're breaking through key areas now. We're now trading about $100 on dollar index. So, yeah, big moves. Morning, Guy. Right, let's go have a look across the board then, because we were talking about this dollar index move to the downside. Like I said, on the weekly chart, we've been assessing this sort of weekly sideways movement, and on the year, we've been pretty much trading sideways between the 105 spot 75 and that 101. Now we're through the 101, so it's about analyzing the next point of support or resistance. Now I've looked around. We saw the $99 area here. These are the highs back in March of 2022. So that seems to be the next stop for the US dollar index. And if that's the case, then what can that present traders with? It could present them with some potential short opportunities, maybe starting to look at your euro, your pound, long and whatnot. Now, we did discuss euro longs this week, all the way back down at this break and sort of retested the 10.980. I think this is where we were when we were on the live stream, looking for the pullback into this area for a continuation. Now, obviously, if you were watching that at the time, that could have been something that traders jumped on the back of. That's now moved 209 pips to the upside. Really nice move in there. 20 and 50 moving average in line as well. So yeah, some great moves going on. Let me just move some of this down in here just so it's not taking up too much of that chart real estate. What I will do as well is just flip it over to this view. Here we go, so you can see that in a little bit more detail. Now let's go to those daily and weekly charts, because again, even though the dollar index is likely to move to that $99 now, where can euro US dollar get moving to? Where we can see, kind of looking left over here, we've traded through a little bit of a resistance. Now this high formed back on the 31st of March 2022. So if you're following along with me on the charts, if you take your cursor over to the 31st of March 2022, you can see this high that formed. That price is now starting to break through. So again, where could we see price head towards? Now I think if we're going towards $99, then is this area actually the next area for euro dollar? And that's around about 114.60s. Should we go with 114.50? Let's just see how that looks. Okay, 114.50. I want to see what 75 looks like. I think 75 is a little bit more of the extreme of that level. So 114.75 is that nice little zone there. Like so. So is this the next stop for euro dollar? Okay. And if it is, you know, how do traders take advantage of that? You can take advantage of that in multiple different ways. You know, we've discussed in the past that I like the weekly in line with the 4-hour chart. So if that's something that you're interested in, if you go on the weekly, then the 4-hour. What we need to wait for on the 4-hour is some kind of retracement. So, you know, I'm expecting maybe a retest back at the highs here at the 1.1075. So if price can pull back, that'd be an area I'd look to try and see if buyers start to step in. I mean, look how aggressive price has moved. I mean, the moving averages are nowhere near catching up with this at the moment, and they're very steep. So we'll see if that can pull back, see if it can come back into these previous structure highs or the prior highs that we've seen break out. And if it does, can price start to find some support around that area? So that's going to be an area of interest, definitely. I mean, if I was on TradingView and I was showing you from a volume sort of perspective, you know, there's a lot of volume being built up in and around this consolidation zone. So it could drop a little bit deeper before continuing that move higher. But at the moment, the 1.1075s is the level. That being said, let's go take a look at cable, because cable was another market that we expected to come into the 1.3. It has hit those 1.3s now. It's even gone higher. We're trading at the 1.30. It was 1.313 at the moment. So we are well above the 1.3 zone. And yeah, so this has been a nice market to watch. I think out of all the markets we've taken a look at most recently, cable has been the sort of cleanest charts that we've been watching. And you know, we had a break of that doji candlestick high. We've traded higher ever since. So is cable on the march as well? And there's obviously the thing with the Bank of England at the moment, which are looking to hike interest rates further. Inflation rates in the UK still pretty bad. I mean, I'm in the UK and our mortgage rates have gone up quite considerably at the moment. So it's going to get to that point, isn't it, where there could be a chance of sort of a UK recession. I know GDP came in at minus 0.1%. So it's that old saying, isn't it, where we usually get two months of sort of GDP figures coming in lower, you can consider yourself in a recession. Let's just have a little look where the UK is kind of pictured in that. But obviously, pound's still rising because rates could still head higher. You know, we could be even seeing rates head towards sort of 7% in the UK. So it's a bit of an interesting dynamic at the moment, because although you've got that fact that there is potential rate hikes still to come, yeah, that should technically have a negative effect on the economy, right? Because borrowing becomes more difficult. You've got the situation where unemployment is meant to rise. I think the problem globally at the moment, which is now starting to kind of come onto the news, and we spoke about this a couple of weeks ago, was the wage growth situation. Now, if I just go to, we can probably take a little look at this together. So if you don't know about this website, this is a really good website. You've got trades and economics. If you don't know about this, it's just really good if you want to look at sort of instant data. So if we go to forecasts, countries, yeah, Denise, stagflation, exactly that. Then go to the UK. We could have a little look at the GDP growth rate. And you can see we're all that, those 0.1s, minus 0.1. You go back, you've got annual growth rate as well, moving lower. Let's have a look at the inflation rate. Inflation rate is still at 8.7%. So, yeah, very, very interesting data in the UK at the moment. And I think what we're seeing at the moment is obviously that expectation of interest rates to go higher. And obviously, we've just seen the dollar just drop significantly, haven't we? So the market's obviously favouring that dollar weakness. And if that continues, cable should continue to push higher as well, which is, again, is that really a good thing for the UK? Absolutely not. So you don't want the pound to become too expensive. Now, looking at it from sort of a weekly perspective, you know, where there's next levels of resistance, well, we do have one sort of at the 132 handle. So if we were to just kind of drop that in there, 132, these lows in here, and that kind of prior high to the 1.3, which was set in the 20th of March 2022, you know, that level there could be quite interesting to work with. So if I just pop in one spot 32, okay, like so. If price trades for the one spot 32, I think we're coming up into these next levels of highs. Now it just depends what high we kind of work with here. Might just sort of put ourselves in the middle of both of these. Maybe at the 136.25s, something like that. Again, I think this is all going to depend on that dollar index as well. There we go. Just from a technical point of view, that's what we could be looking for. To Sharon, yeah, I wonder if pound might go sideways or down if that happens. Yeah, I mean, at some point, I think it will start to have a negative effect. Just like you're saying there, it's just when do we get that negative effect coming into play? One spot 32 resistance as well. So let's just go down into a daily chart. Actually, might even need to go to a 4-hour chart because, oh yeah, I'm actually thinking, where do we try and look for any kind of opportunities there? Looks like we may hit the one spot 32 before we get any kind of pullback. Just kind of looking at this, it's kind of saying to yourselves, how would you jump in on this kind of market? Very difficult to kind of ride that. unless you're on the lower time frames. Now, we were obviously looking at the hourly charts on this one. Now, to be honest, it seems a bit silly for me to exit my position now because I was long here, exited around about here at these highs, looking for another entry into the market, and I've left a stupid amount on the table there. So at 268 pips on the table. So that's not fun to watch that happen, but we've got to be sensible about some opportunities, and I think maybe, can we get back down towards that 1.3 handle? That's just from a technical point of view. Got to be looking at where do we think price could come back to, or where would we be happy to basically look for those opportunities again. So yeah, it might be a bit of a difficult train to jump on at the moment. Yeah, Kara, I think I agree with that. Good morning, Mohammed. I think we're probably more likely to see a little bit of a burst higher there. Now, one market that's really, really enjoyed this little bit of dollar weakness is the Australian dollar. And I don't know whether that's because the VIX has also taken a little bit of a jump lower. Now, this is what we were kind of talking about last week with, could the VIX come back down again to have a little bit of a retest before seeing another kind of jump higher? Now, the Australian dollar has really took to that. Obviously, Aussie is a risk currency, can be affected by the risk on, risk off situation in the markets. And yeah, we've really powered the last 2 days. We've moved 219 pips, whereas the average before that was about a 100 pip move. So, we've almost doubled the average there, smashing through some key areas. The 1.69 handle as well being traded through at this current moment in time. Oh, actually, we're approaching the 0.69 in there. So we may start to see a little bit of a reaction there. But Aussie across the board has started to strengthen. I was looking for sort of pound Aussie longs. They didn't work out in the end. We've seen that real sort of change in the momentum here. And in these kind of situations, Aussie can be quite unpredictable. So I'm probably going to stay away from that market. One that is fairly predictable is dollar yen. I mean, any kind of rally is being met with some kind of sell-off. And I tried to catch this wave yesterday on a move. I was hoping for a CPI to drag us back into the 142. Was it 142? No, it might have been the 140. Sorry, 140.30. I was looking for CPI to drag us back into this area. Didn't happen. Prices continued to push lower. And today, we're kind of consolidating, but I think this is one of those markets that's not really going to give you many sort of deep retracements at the moment. I think obviously the yen has been a little bit stronger. Dollar is fairly weak. Is the next step now for another move down in dollar yen, and if it does move lower, where could it potentially go to? Well, we've got 137.50 running across here. That's the most sort of sensible place for price to come into. If it breaks that, then you're looking at your kind of previous lows, aren't you? Sort of the 135.40s, 134s, down to the 130.50s. So it depends on how the market reacts. We may start to get some kind of head and shoulders here. You've got maybe the left head, maybe if price starts to find support here, chops around a bit, could we get some kind of left shoulder, head, right shoulder action. Now, the only thing about this is obviously nothing fundamentally has technically changed for the Bank of Japan. So they would obviously be welcoming this sort of recent bout of yen strength, because they were just talking about intervening. Whether they've actually intervened or not is probably unlikely, but the talking of intervention has kind of helped their cause here. We hit that 145 handle and we've pretty much not looked back. Prices sort of continue to drop lower. So, I mean, clever thing really would have been to short from that 145. We're about 600 pips up. But yeah, we got 140.50 as that sort of left shoulder. We could call it a left shoulder potential resistance there. Other than that, I just think you're going to get shallow pullbacks, to be honest, on dollar yen. Yen across the board, though, has dropped a little bit of that strength. I mean, if we look at Aussie Yen, for instance, Aussie Yen has crossed over, continued to push to the upside. Pound Yen has started to rally back a little bit as well. Another market that I was particularly into was CAD Yen. Now, this market is quite interesting because, again, I think that there's some opportunity for this market to continue to the downside as well. CAD has been a pretty weak currency for some time, and I still like the idea of being on that sort of CAD train, especially for the short term. And we are approaching 104 spot 50, which were these sort of lows that were formed back in November 2022. So we had a little bit of a stall in them recently in June, looking for maybe a retest there. So again, how do we look to potentially capitalize on a potential move to the downside? You're going to have to wait for some kind of either pullback, continuation, or we're not going to get the pullback. I mean, look at this sort of pullback there at the moment. It's not really full of buyers, is it? There's no sort of aggressive buying going on at that point. You know, in fact, it's quite a shallow retracement, isn't it? And typically those shallow retracements can lead to some kind of drops to the downside. So it's very similar to kind of what we saw in this pullback here. A little bit of a slow grinding pullback. You know, can it continue to sort of trade lower? Whether it does another leg like that, you know, I don't know. But if it does, you know, we could watch the sort of weekly time frame, because I've put in the 104 spot 50. But if it trades for the 104 spot 50, the next sort of area is all the way down here. Now you've got 100 spot 50. You've probably got the 101s as well. So yeah, whether that's a bit of a push at the moment, I don't know. But we'll have to see what happens with this one. I might be over ambitious with the 100 spot 50, considering, like I said, the yen's fundamentally not really changed. Any questions so far, guys? Any markets that you want to take a look at in particular? I'm going to go over to gold now. Gold has started to make the right noises for me now. You know, this could be a sign that we're going to get the markets back up into that sort of $2,075 range. Yeah, like the sort of area here with the 1950s being broken. 1890 seemed to be the point where we did find that support in and around that area. Now, the reason why we looked at that in the first place was because it kind of had this sort of support here, sort of resistance there as well. Now, I know just from like putting my volume cap on there, we would have had a very shallow volume there. It would have been very low volume and then lots of volume down here. So a lot of the times we can come to sort of the ledge of a volume point. So let's say, actually, I've drawn that pretty poorly. Let's say it kind of looked like this, right, with volume. And then you'd have your point of controls through there. Okay. So this area here of low volume can often be a bit of a ledge for resistance and support. So prices come into that. We found that support. We start to push away now. So it's again, how do we kind of look at this one now? So if the dollar's going to continue to weaken, you know, it should help those commodity prices move higher. Oil should push up as well. That's a good point, Caro. That could help the CAD strengthen a little bit. But yeah, you know, looking at 1950, we're trading through that at the moment. Seems to be a bit of a good sort of area. 20 and 50 have crossed now, which is great. So looking to see if, you know, we get some kind of pullback and continuation there, maybe. Sharon, do you always use pending orders or enter manually sometimes? How long do you wait to trade during a strong news event? What's your mindset during those times? That's some good questions. Do I always use pending orders? No, I don't always use pending orders. A lot of the times I enter manually. Pending orders are great though. So if there is sort of a level that is really strong, that I would consider really strong, and I'm happy to place a position there, then I would just use, personally, just use a limit order. But a lot of the times I like to see, you know, a lot of the times we want to be buying or selling when the market is also agreeing and doing the same. So what I mean by that is that if price came back into this support here, I would rather set buy stop orders on the way up, so that if price does move higher, at least I'm getting in with the momentum of price. You know, if I was to set a buy limit order there, and let's say, you know, we had a big news event and it just crashed through it, then, you know, we've been entered into the market for no good reason. So I would rather enter on sort of stop orders. I would rather enter manually, because then at least, you know, you've got the control over how you get involved. But limit orders can work too. Just depends on how you feel about that. How long do you wait to trade during strong news events? Again, another good question. It depends. If I'm in a position, I like to close out those positions before a big news event. If I'm not in anything, I would just let the news event pass, and I'll probably wait sort of 20 minutes to half an hour before looking at anything again. A lot of the times, if it is a big news event and the market, let's say like NFP, for instance, when you come to it on a Friday, a lot of the times on NFP, the market is just sideways all day until NFP happens. So a lot of the NFP days, I don't trade at all, to be honest. It's not something I've always been into, to be honest. I just think there's too much, depending on your risk appetite. I'm quite conservative, so my risk appetite, if you take the personality tests that you can do, I'm what's called a planning trader. I have to be really into a move to want to get involved with it. So to try and NFP is a little bit of a gamble for me. That's all I'm trying to say there. What's your mindset during those times? Yeah, you've got to have a clear mindset. You've got to be clear, calm. You've got to know your entries, exits. You've got to really know where you want to be involved. And again, that's very much personal preference. You know, you can have these sort of strategies that are in play, but, you know, like I said, I like to build a sort of a fundamental bias around those. And again, that's why we've been dollar short for the past sort of while. It's because fundamentally it looked like it was going to be dollar weak. So, you know, and then it's about building your strategies around that. So obviously, like I went pound dollar long as the dollar strengthened that once. So we had some good data out the dollar. The dollar index rallied, which I thought was really weird considering the situation in the US and the data that we had. So one currency that I thought was getting stronger was pound. Came to cable, saw that was in the zone of interest, and just went long. So there's you've also got to have that sort of feeling as well, and be happy with your entry, because at least I knew here that I've got, you know, 240 pips to the upside. I think ATR at the time was like 90 to 100 pips. So I knew I had, you know, 1 to 2R if I was going to use my ATR. I ended up going with like a really tight stop, which was like 30 pips, just because I was fairly confident. Came out with like 60, 70 pips. So I managed to get that 2R within that range. Obviously, that would have been a lot more if I had held it. But, you know, it's the potential of what could happen. So again, I was just like, can I go long again? But I was looking to get long here. Would I have been happy to get long there? Probably not. Now, I don't know the date of that move there. I think that was obviously driven by the data on the 12th, which would have been, yeah, so that could have been, let's see the time of that. Yeah, so that was the CPI data, that move there, the driven price. So would I want to be long there? Probably not. Absolutely not. Okay. Hopefully that answered all your questions. Right, guy, can you take a look at Euro Oz when you're finished with gold? Yeah, let's have a look at Euro Aussie. So we were looking at Euro Oz potentially coming up into that 1 166.75, weren't we? We're looking to see a bounce at the 158.75. Prices were moving nicely to the upside there. This was that market where we thought we may have missed the sort of train here. Ever since we kind of come to that 165, though, we did get sort of a secondary move, didn't we? But 165 seems to be the point where price is being held up. So I don't necessarily think there is anything to do here at the moment. We've been held up at the 165. We've got these lows here at the 162.50. So there is a little bit of maybe like a range starting to develop here on EuroAus. I was looking at the 4-hour time frame as well. This is where we were looking at getting in, wasn't it? So on the hourly. Again, didn't quite make it back to where I was happy to get involved, but you know, 20 and 50 was in line. Market got to that 165. So I think as long as you protected capital at 165, you would have been all right. Ever since then, though, we just kind of rejected a move lower. Again, that's down to that Aussie strength, isn't it? That we're seeing in the market at the moment. Aussie strength coming back in. I mean, looking at it from a weekly point of view, you know, you've got what we've just kind of highlighted there. I'd wait to see how that closes, to be honest. I think at the end of the week, if you're looking at this, like bearish sort of engulfing candle, I'd probably be more inclined to say, yeah, price is more likely to head lower. Again, fundamentally as well, I mean, Australia have got to do something. They've got to do something. I don't know whether it's next week. Yeah, we've got Oz monetary policy meetings. They held rates at 4.1% last week, which was a little bit, considering the fact I think their inflation rate's quite high at the moment. So we'll just look at Australia inflation rate, 7%. So for the RBA to hold interest rates at 4.1%, I think the market saw a little bit of shock in that. I think the Aussie is just getting stronger at the moment because of that risk factor involved, the risk on, risk off sentiment at this moment in time. So I think that's why we're seeing that strength in the Aussie. But the RBA probably will have to hike rates again if they want to try and bring that inflation rate down. Let's see when the next inflationary data is out of Australia. You got GDP out of China coming up next week. Could be a big pusher for Aussie. Okay, so it's at the end of the month. July 26th is where we see the CPI data out of Australia. So I suppose you're going to have to wait till then to see what particularly happens there. Why is the DAX due for a fall? That's a good question. I don't know. Would be my answer. If I knew, I probably would be sitting with a massive short order on. I mean, we're coming back into those highs, aren't we? So area of resistance coming up. We've arguably got a resistance zone in here now where we sold off before quite aggressively. You know, we're in that selling area again. You know, ECB are looking to hike interest rates again. Still should have a negative effect on the stock market, right? ECB looking to hike rates. So we should, again, see that little bit of a shock. But it's not quite having the same effect. I mean, let's have a quick look at FTSE as well, because we were talking about FTSE the last couple of weeks and talking about that short potentially through this sort of area here, down to that 72.50. Now we're back in at those lows there. So that's quite an interesting thing to see. Seeing cable rally as well. You're seeing the FTSE moving higher. So, you know, that's an interesting thing to see. I just think that the FTSE shouldn't be there. It shouldn't be this high at the moment. I think the FTSE should be, you know, down at 67.60s. So something to consider. I think the stock markets are having a little bit of a interesting time at the moment. A lot of the market's not making too much sense. Can you show us your capital? No. Yeah, right, guy. I think the euro was that double top on the daily. Right. Yeah, everything expensive in Europe. Yeah, everything's expensive everywhere. Like I was saying, mortgage rates in the UK have gone up. Again, I think I was reading an article the other day, and some analysts are calling for the central banks to just force this recession now, almost to get it over and done with. Why does news from China affect the Australian dollar? Well, that's because Aussie is one of the biggest sort of, biggest sort of import exporters. They rely heavily on China's trade. So that's why. That's a good question, actually. I'm going to put that in my notepad because I think that would make a good short. Like an ideas book. And yeah, you guys provide me with really good questions to ask. Why does China data affect Oz? I'll add that into my shorts list. What news did we get today? I didn't even talk about the news we had today. Obviously, core PPI came in at 0.1%. PPI down to 0.1% as well, although PPI month on month actually grew from minus 0.4% to 0.1%. Unemployment claims came in at 237, which was better than previous. So that's where I think the problem is at the moment with the dollar or with the markets in general. It's the labour market, isn't it? I think it's finding it tough. The labour market is still so unemployment claims to be at 237. Let's just have a look at the graph of that. It's still relatively low. What range have I got here? I've got a yearly range. If I go to, yeah, look, if we bring in Forex factor here, and we look at employment claims compared to, so that there was obviously COVID, right? Where we saw, nobody could really actually go out to do work, right? A lot of people were laid off, etc. Unemployment claims went through the absolute roof. If we look at 2023, unemployment claims are still very low, very, very low. Let's see if we can scroll over a little bit. Yeah, I mean, if we look at it compared to, let's just try and get the whole, I don't know if I can get the whole view in there. Range max. Yeah, I mean, look at that. So unemployment claims still really, really low. I don't know what the unemployment claims are like if I go back to when inflation was really high in the past. Let's have a look at that. I might get that better up here, actually. Let's go unemployment. Labour market, unemployment rate. Let's look at 25 years. Yeah, I mean, unemployment rate on percentage wise in the US still at like below 4%. So the problem is in the labour market, because if people are still working, if people are still collecting their wages, there's still going to be some input into the economy, right? And I think that's where the problem is at the moment. The unemployment rate isn't high enough. Right. Speaking of China, Oz relation, today's China import-export data falling didn't affect Aussie and Kiwi at all. What time was that data out shown? Because I do... let's have a look. May not have affected it because of what's going on here. You know. China GDP data, though, and CPI data will definitely have an effect. The only problem as well is a lot of China's data that gets released is what's called sort of not believable until we get the independent release. Because nobody actually believes the figures that China released. They, you know. Please take a look at Aussie Yen. Let's have a little jump on Aussie Yen. Starting to see a little bit of decline there. Let's have a look at CAD Yen actually quickly. Did want to be short CAD Yen. I may have missed the boat. Look at that. It's just kind of tapped the 50. We're off by 35 pips. I have to revisit that one in a bit. Let's go on to Aussie Yen. Yeah, Aussie Yen, interesting market, isn't it? You know, looking at it from that weekly perspective, and we kind of came into these highs, didn't we? And I was very much thinking, yeah, this is definitely a potential move to the downside. We've got a low of 93.22 on this weekly candlestick at the moment. These highs would have been the area I really would have looked for price to retest. We kind of haven't got there yet. Whether we still see that yen sort of strength come back within the market. At the moment, we're kind of mixed. Yen is a little bit mixed across the board today. And I would prefer to short it against, or to buy it against sort of weakening currencies. Aussie's just not one of those. So for us to kind of be really involved here would take a lot. I'd need to see some real weakness coming into Aussie. Kind of made it to the 95.25 area here. Prices then seem to sort of take a little bit of a dip there. $5.25s. But yeah, I would much rather be looking at your dollar yen short, or your like I said, your CAD yen short. But you know, it doesn't mean that price can't sort of fall from this area here. You know, we're back at this resistance level now. You know, does that weekly start to come into effect a little bit? I mean, the daily looks, if the daily closed like that, you know, I'd expect the next day to kind of breach that area. If it then was to kind of close like this, then maybe. But that daily is just too strong of a bullish candlestick for me to want to get involved. This could just be a little bit of sort of profit taking from the day, because if I bring in the ATR on the daily, let's have a little look at the ATR. ATR on the daily is 122 pips, and we've done 154 today. So that is a, you know, we're above the average ATR for the past couple of days. If I was to put that into, let's do a week ATR. Let's get an indicator list. Let's do like a, yeah, we'll do 5 trading days. It's 118, so we're above the ATR of the past week and or the past 5 days worth of trading. So what we're seeing there is probably just a little bit of a pullback from that sort of aggressiveness of a move higher in there. Very lucky pair for me. 3 days down and today up. Nice. Cool. Thank you for joining me, right guy. Have a great day. I'm probably going to end up end it here as well. Can you please explain the correlation between the VIX, S&P 500 and the DAX? Well, the VIX is a volatility index, and it can be from the S&P 500. So it can, you can get a volatility index of the S&P 500. But that is a good question. I'm actually going to add that to my list as well, and I'll answer your question. Now, the volatility index, it can be a gauge for risk on, risk off in the markets. Okay. And when the volatility index rallies, the market can go into more risk off assets. So a risk off asset, you can argue, is the US dollar, right? So that if the VIX index was to rally, the US dollar could get stronger. Now, if you look at this, we've been pretty much on a downward trajectory, for a good while now. And if we look at sort of the peak there, that's like your highs in October of 2022. I don't quite know where the dollar index started to turn, but you can kind of see there, October 2022, right? So we started to see the VIX index drop to the downside, and the dollar index has followed that. It's meant to be the same really for the S&P 500. There's obviously other factors involved with that. I mean, the S&P, on the other hand, is meant to rally as volatility index decreases. So you can see here we kind of double bottomed around about October 2022, and price has rallied ever since. So you've got the correlation of the VIX moving to the downside. So it's showing that volatility is decreasing in the markets, and then you've got all the volatility indexes decreasing in the markets. You've then got the correlation of that is the S&P 500 rallies, and the dollar would also sort of weaken at that point. That's why I'm kind of looking to see when is the VIX going to bottom, because if the VIX starts to bottom and we start to get a little bit of a sort of rally in the VIX, then we can start looking for the turnaround in the S&P, start looking for the bottom of the dollar index, if that makes sense. Denise, don't like trading Swiss pairs. I agree with that, Denise. Swiss pairs are horrible. Saying that, I did take a CAD Swiss short this week. But yeah, that was more for the CAD side of things than the Swiss side. Why is Swiss so hard to do well at least for me? Yeah, I think the Swiss in general is just a bit of an annoying currency. It's a bit of a choppy currency. Don't really know why. They all have their own kind of characteristics, don't they? I don't really know why the Swiss franc is that way inclined. Maybe it's the sort of trading volumes in the Swiss. Vincent, the streams have always seen some regulars. Can you take the struggling traders and teach us? What would you like to know, Vincent? I mean, these streams are here for you as well. If there's any kind of specific topics that you want to let me know about, add them in. And yeah, I will try and help you as best as I can on these sort of streams, in the videos. So yeah. Right, guys, it's been 49 minutes. Wow, that flew by. Right, I'm going to leave it there. I hope you enjoyed the stream, and as always, like Vincent said, we've got a few regulars in here, and I really appreciate that you turn up and watch these and take your time. Yeah, Carrie, that's a really good point. Look for extremes. Yeah, I'm going to leave it there. Like I said, thank you for joining me as always. If you can leave a like on the stream, I'd really appreciate that. And yeah, I will speak to you next Tuesday. But if you do have any comments and questions in the meantime, fire them under the video after this is sort of released onto YouTube. If you go to the live tab, you can rewatch it. If you do have loads of questions, drop a message in there. And thank you for joining me as always, guys. I really appreciate all your comments, questions, and things like that. So yeah, Thank you, guys. And I hope you enjoy the rest of your week. Cheers.